What is up, guys? Today I'm going to teach you about turtle soup, what turtle soup is, how I use it, how you can find it, and just the concept in general. Now, turtle soup necessarily isn't a very hard concept. It's actually very simple, but I think you would, like, at first I expected it to be way harder, so then I kind of didn't think I understood it. But you definitely, if you already know turtle soup, you understand turtle soup, you just don't think you do, basically. And if you don't know turtle soup, I'll teach you it right now. So all turtle soup is, it is just a sweep of liquidity inside of a fair value gap or an imbalance. That's all it is. And now, like right here, one simply, whoops, sorry. And the thing is, you can combine a turtle soup with an SMT and a stop rate. Those are the most high probability turtle soup setups. You can find a turtle soup on a 4 hour, a 1 hour, a 15 minute, 5 minute, 1 minute, 30 second, 15 second. It's a fractal concept and price is fractal, so therefore it's on everything. You can also use it for your bias. And the way I use it is I use it for confirmation for my entries. Now let's go look at some examples of turtle soup. So we'll start here with a 4 hour example. Now this is really good because so right here you have a big 4 hour imbalance. As you can see, big imbalance. You guys know what a fair value gap is. We'll mark this out as buy side level first. So say you have it marked out as buy side. When price comes up and sweeps it and instantly rejects it, like there's nothing up here, this is a soup move. It's simply that simple. It is literally just a sweep of liquidity inside of an imbalance. Now, this is a good example as you pair it with the SMT that is created with this soup move right here. That is an example on a 4 hour chart, and look at price, it sells off. Probably something on my nose. Okay, now I'll show you. I think this is an hourly one down here. Yeah. So look, down here, this is a bullish example. You have this clear 1 hour imbalance that I have marked out right here, and then you have your clear sell side level, your swing low. Price comes down, takes the swing low with rejection. Whoops. But the reason it is soup and not just a liquidity sweep is because it's inside of an imbalance. That's the easiest way to think of it. A liquidity sweep inside an imbalance is turtle soup. Excuse me. And look at price. Goes straight up. Now, right here, I think it's 15 minute. Let me look. Alright, right here, we have a bearish 4 hour imbalance, big sell off on the 4 hour, big 4 hour imbalance, and now we have a clear buy side level in the imbalance. So you zoom into the hourly, say. Look at this. Sweeps it to the tick. This is how turtle soup is going to react. Usually you take a higher time frame imbalance with a more internal level of liquidity. We'll do again. We'll mark out our buy side level. So you have your buy side level. It comes up, sweeps the buy side level, takes the liquidity, and then price moves down. You can use it as a confirmation. And I think this one down here is on a 15-minute time frame. Yeah. So for example, right here, this is an hourly imbalance. I'll prove it to you on the hourly right here. And you go down to the 15-minute and you have your clear 15-minute highs right here. And excuse me, you have your clear 15-minute highs right here, and price comes up, takes again. So this one's a double soup essentially. So right here, this was your first soup move right here, this candle right here. So then you move this candle to here and move it over here, and you have another soup move. And now when you have a turtle soup move, there's different ways people trade this. Some people will trade the soup like this. They'll seal rejection and they'll instantly enter off of it and just have their stops, like that. And then say you're targeting your sell side level. Now, it does bring very high risk to reward, but it just depends how you trade it and how confident you are with it. And some people, like me, I would use it, for example, to help confirm my bias. So right here, this is right at like market open Friday. You have your range. You get a clear turtle soup move, sweep of liquidity, aka manipulation move. Now I'm confident that price is going to go lower. And for example, if I'm confident price is going to go lower after the turtle soup move, where am I confident that price should not return to if my draw on liquidity is correct? If my draw on liquidity is correct and we have a bearish turtle soup, price should not go back above this high. So therefore, you could have, wherever you enter at, whatever your entry model is, you could have your stops at the high, or if you enter up here. And then you could target your clear sell side level. That's how I use it. I use it as necessarily like and sometimes you'll get moves where the turtle soup will be an SMT. For example, you have this like this, and this would be an SMT. I think there was one Thursday. I don't know for sure. I'm not even going to check. But sometimes you'll have it where the turtle soup is also an SMT, which gives even more confluence, or it's also like a stop raid, because The reason it's also a stop rate is because look, I'll show you right here. So say you're trading and you take this level right here, you take this level and you get displacement down, not clean displacement, and you go short off this inversion fair value gap, and you enter long right here and you put your stop above the highs like that. Now look, you got stop rated right here, which was also the real turtle soup. And there's more reasons why this turtle soup is way more invalid than this turtle soup right here. It's because time and price, you have to align time with price. You would never want to take this soup right here because this is right before market open. You would want to wait for the 930 manipulation move to confirm that that is the correct soup. Because look, if you were to enter here and it's not the correct soup, you would then get souped, aka stopped rated, aka whatever you want to call it. So look, here's your soup. Or we'll say it's your stop rate, it's also your soup. And then to add something on to that, it could even be, the cherry on top would be that this is also an SMT, which it might be right here. And then say you find that your draw on liquidity is the clear sell side level here, you essentially have a market maker sell model here, and you just add these things on top to then get clean entries and then to know where price should not revisit. The key thing is using soup is price should not revisit this level if my draw on liquidity is correct. I use it as a confirmation. I'm not confident with it enough to use it as an entry model necessarily. But yeah, that is how I use soup. That is turtle soup. All it is a sweep of liquidity inside of an imbalance. It's as simple as that. If you know turtle soup, you know it. And if you don't, just comment in the video and I can try to explain it. Again, it's a very simple concept. Just sweep of liquidity inside of an imbalance. If you enjoyed this video, please like and subscribe. And if you have any more questions, you can join my Discord in the link in the description. It's free. And yeah, thank you guys so much. Have a great day.